They thought I would fold, but I'm never folding. Please don't call my phone, don't you ever think of calling. Catching these pips like daily, making money easy. Catching these pips like daily.
What's happening YouTube? It's a boy, Weisenheimer, the one and only Weisenheimer. So on today's video, we'd be focusing on synthetic indices. Obviously, I've seen a couple of comments, people recommending certain pairs that we must look at. And obviously, I've just taken that into consideration because obviously I've been replying those comments, telling them that I've noted the comment. So today's the day. I'm going to be looking at the synthetic indices that people suggested that I must look at, and obviously I'm going to analyze them and make it sure that at the end, when this video ends, everybody is familiar with how to analyze those pairs, right? Because obviously synthetic indices are the simplest pairs to trade in the markets, yet synthetic indices are the most tricky pairs to trade in the financial markets. So we're going to get today's verse on Psalms 27 verse 14, and it reads like, wait for the Lord, be strong, let your heart take courage, wait for the Lord. So as you can see, there's an emphasis on wait for the Lord. So basically I'm going to take this and obviously relate it to your trading. If you're not yet consistent, don't give up. Wait for the Lord while you put in the work. You understand? That's what I'm going to tell you today. Wait for the Lord. Your time will come. Patience is key. Just wait for the Lord. And obviously, I'd like you to go and check the whole chapter for full understanding. If you're new to the channel, you are welcome. Thank you for checking us out. Obviously, I'm pretty sure that when this video ends, you won't regret your time, because obviously time is money, and time wasted will never be regained. So I best believe that after watching this video, there'll be a thing or two or even three that you've picked from this video. So make sure that you do like, subscribe, and obviously recommend the page to your friends, family, and whosoever that you think might need help with trading. And obviously, if you're a returning subscriber, thank you for the love and support. Let's just keep the numbers running. We can see that the channel is growing. There's improvement on a daily basis. So thank you if you're a returning subscriber. Make sure that you like, make sure that you comment, make sure that you share with your friends, right? So let's get to it. What is up, guys? So basically we're going to be looking at a couple of pairs that people recommended in the comment section, right? So we have Volatility 75 1S. Someone in the comment section recommended that I must analyze Volatility 75 1S for you guys with the strategy, right? So obviously I'm going to start from a bigger time frame, which is obviously my daily, right? Then obviously I can see that the market gave me a beautiful U-turn here. So I'm going to start off here highlighting all the market lows. All the market lows that the market obviously printed for us previously before I can go to the highs. So this, you can also call them your support levels, right? Support level, support level, support level, support level here, right? So now from marking all my support levels, obviously I'm going to the resistant levels. So I'm just going to switch or change the color so that it doesn't bring more confusion to you guys. So I'm just going to use the color, this color blue, right? So I'm going to highlight all the resistant levels or my market highs right here, right? So what you have to do right here is obviously look at the nature of the markets. If the markets previously, if the SN level, for an example, this one here was a resistant, but the market broke, then now it can act as a what? It can act as what? As support. So if the market can push to this level, you know that your blue is your what? Was your resistance previously, but broken into what? Into support. So you can be looking for buying opportunities. So that's the reason for these levels, right? So I'm just going to switch to a bit of a lower time frame, like my H4. So on my H4, I'm just looking if there are any possibilities, obviously, or any other levels that I can highlight. Yes, we do have them. So I'll just go ahead and highlight the levels, right? Right here, support level. Resistant level became support. So I'm just going to highlight all of them, right? So now, obviously, with that being said, after highlighting all of this, you know that with our line graph, we end, or we just cut off the line graph on on H4. So from here I can switch to a bit of a candlestick graph. So obviously on my candlestick graph, you can see that the market broke a certain level here, which is also known as our level of what? Our level of support here. This was our level of support. So obviously the market broke here, obviously pushed back to retest the previously broken structure. Then now it gave us the first candlestick outside, the second one, which is here outside. Then when the third candlestick forms, obviously we're going to shoot or confidently know that the market is going to shoot to this level. Then from here we're going to be looking forward for buying opportunities. However, you know that we do use lower time frames for what? For entries. So now if you can look at this, the market gave us a beautiful retest. Obviously this was a double bottom. The market was supposed to respect the double bottom, but then it couldn't. So but in fact it respected the double top. Then after it came back to respect the previously broken structure low, then obviously shot to the downside, gave us another low here. And now we're looking towards the market respecting this low and further pushing to the downside. So if you can look, I just want to show you how you have just got your entry, obviously on a lower time frame. So you know that if the market is giving you a retest or whatsoever, some sort of a retest right here, the market come here, give us the first candlestick touch. When the market closes, it must close below our candlestick, because I mean our zone, because we are looking for what? For selling opportunities. So it must close below. If we're looking for buying opportunities, it must close way above. So that's just how it is. Then now when the second candlestick formed and closed inside, when the third candlestick formed, that's why you are obviously supposed to do it, to capitalize this sell and move with the markets all the way to the downside as it shot to the downside. So obviously another thing that you have to keep in mind or to note are obviously the chart patterns, right? Obviously the chart patterns, because with the chart patterns the market can just make a U-turn out of nowhere or without you being ready for that. So you can see that the market just gave us a beautiful U-turn here due to this right here. So the market gave us a beautiful that touch here. So it's the first, the second, and the third. You know that I do what? I cut off the wicks most of the time. I leave the wicks outside. So those of you who don't know what I'm talking about when I say wicks, I'm talking about these things here where the market rejects and obviously leave that stick of a candlestick, right? So that's just those are other wicks, right? So obviously now we're looking towards this thing. I won't take any trade here as long as the market is still playing around or in this channel. But however, if the market will break above, if the market will break this let me delete this, guys, for now, because it's kind of disturbing me. If you have to know that if the markets obviously break this trend line here, obviously I'm going to wait for the first candlestick to close outside. Then that's going to be my first confirmation. Wait for the second candlestick to close outside. Then obviously when the third candlestick forms, that's where I'm going to do it. That's where I'm going to capitalize, or I'm going to start looking for buying opportunities. That's where I'm going to take my first ever buying position. However, if the market will also push to the downside, because obviously it looks like the overall momentum is bearish, right? And obviously there's a certain level here, there's a market low here, so the market has to respect that previously broken structure low and obviously shoot to the downside. So if the markets will break out here, I'm gonna wait for the first candlestick to close outside. That's gonna be my first confirmation. Wait for the second candlestick to close outside. That's my second confirmation. I mean, obviously confirmation enough. Then from there, when the third candlestick forms, that's what I'm gonna be doing. What I'm obviously gonna sell the 75 1x index. So this is what I have for you guys on volatility 75 1s index. And obviously I feel like if you enter on the third candlestick, your stop loss should be very tight, right? Should be very tight, because once the market violates that candlestick and obviously surpass it then you are most likely to have an invalid setup from there. So put in your stop loss as close as you can, so that you can obviously get to protect your capital. So that's just how it is. I like to keep my stop loss so close, not unless it's money I'm not willing to lose, right? So you must just take that into consideration. However, you must know that I'm not a financial advisor or whatsoever, so I'm just sharing my thoughts. I'm sharing what actually what I do on a daily basis, and something that obviously works for me. So I feel like it's something that you can also get to implement, and at the end of the day it can also be profitable for you, right, without you having to go all the way, because I've came across so many challenges obviously before, and obviously I managed to overcome them. So I feel like if you can just go the way or move the way I move, you stand a higher chance of obviously being a highly profitable and consistent trader, right? So I'm just gonna switch to another pair. If what's forgot this other pair that people recommended, but however I think it should be boom thousand. Somebody in the comment section recommended that I do a boom thousand analysis, right? So with the boom thousand, obviously I'm going to start from a higher time frame, so I can see that the overall market movement is a bearish movement. However, the markets just recently pushed to the upside, so right now we also have to take that one into consideration, guys, right? So I'm just gonna do this. So the first thing that I see now on my daily time frame is obviously a head and shoulder like structure. So I'm just gonna put my trend line here, obviously, then come and put another one here, and put another one here, right? So with the head and shoulder like structure, the rules are pretty much simple. What is it that you have to do? Obviously it's like this. If the first if the left shoulder like structure is inside of our channel, that's your first confirmation. If your head is inside your channel, that's your second confirmation. And last but not least, if your right shoulder like structure is outside of your trading channel, then now that's a complete head and shoulder like structure that will definitely change the trend of the markets, right? So I'm gonna repeat that. If your left shoulder like structure is inside of your channel or your trend or your what's this other name, it's a trend, it's a channel, it's a box, because people call like they have a lot of names, a lot of different names. That's your first confirmation. If the head like structure is inside your channel or your trend, that's your second confirmation. Last but not least, if your right shoulder like structure is outside of your trading channel or it's outside of your trend line, that's your what? That's your third confirmation. That then from there you know that we are gonna be moving to the downside. Because why? That is the trend that changes. That this is a structure that changes the trend of the markets, right? So that's just how it is. On my daily, that's what I see. So I'm obviously gonna come here and put my levels here. First level, second level, third level. So you can see that these are the levels that I have. Obviously I can just push this one a little bit up so it can obviously not leave this one, and this one outside, and can also house them, right? So I'm just going to switch to a little bit of a lower time frame, obviously my H4, you know how we do it. So you can also, if you like, you can also adjust this just to further prove if what you got on your daily time frame is the exact same thing that you might get. So obviously you can adjust this if you want to. You can just put a little bit of adjustments here, but obviously I don't like adjustments because I feel like bigger time frame got the bigger picture, right? So that's just how it is. Sorry about that. So I feel like on my H4 there's nothing much to look for, but however I'm just gonna highlight all of this. Highlight, 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 highlight. Then this is another one to be highlighted. So let me just remove these arrows. So this is just how it is. So obviously you know the rule, the H4 rule. That's where we switch to what? To a candlestick graph. And obviously if you look at this, you see there was a market, there was a spike recently. So let's just check on my M1 because that's where you see them. So there's a spike recently obviously you know how we do this thing. Just want to get this thing. So obviously you know that you can switch to a bit of a line graph if you want to, or just use the candlestick graph. So what you do with boom and crash, you obviously highlight all the market lows, or where the market just gave you spikes. You highlight all those levels, because it will come again and give you another spike. Most definitely, you highlight all the highs, you highlight all the lows, you highlight all the highs. Obviously you can just cut off the wicks if you want to, but if you don't want to, you can just also include them right here. Highlight another high right there. So this is another low, which might be used as a level where the market will make a U-turn. So switching back to a little bit of a lower time frame, like my M5. It's nothing more deep here. So what you do actually, if boom will push to this level, because you are targeting spikes here, if boom will push to this level, you'll buy and put your stop loss. You can just use a minimum of 3 candlesticks as your stop loss. If the market if boom violates a certain level with maybe 3 to 5 candlesticks, then you can close, then wait for another level. If boom comes here, you buy. If it violates with 3 candlesticks, you close. Comes here, you buy. Violates with 3 candlesticks to 5 candlesticks, you close. Same here. Comes here, you buy. If it violates with 3 to 5 candlesticks, you close. Same thing over and over again. Comes here, you buy. If it violates, you do what, you close. And obviously if it doesn't violate, then you made something for yourself. So these levels, you just use them like that, because boom 1000 is a spiking pair, and it is spiking with buys. So that's why I'm saying that if you just wait for it to push to the downside so that it can just gain the momentum, then just buy, then it eventually spikes all the way to the upside. So you're gonna use all your previously highlighted levels. So another thing that you have to keep in mind is that if a level is once respected, for an example, let's say that boom pushes to this level and spikes. When it comes again, don't be looking for this level as a buying level, because obviously if a level if a level is respected once, it is most likely not to be respected when the price pushes back to that level, right? So you just have to move with it. It respects here, you buy. It spikes, you get out, wait for another level like this one. If it spikes, you get out, you wait for it to reject to this level. If it spikes, you get out, just like that, pushing with it all the way to the downside, while you are obviously knowing that you are aiming for the what, you are aiming for the levels that you previously highlighted. So that's just how it is, guys, with the boom 1000. Right now I'm just gonna wait for it to come here, then I'm gonna buy from here. However, I'm not gonna sell, because this is a spiking pair, and when it spikes all the way to the upside. So obviously I want to catch those movements, I want to catch those spikes and move obviously with it all the way to the upside as it goes to the upside. That's just how it is with boom 1000. So if I remember, I feel like somebody recommended volatility 75, right? So I'm also going to check volatility 75, and there's also someone who recommended volatility 100. Yeah, volatility 100. So volatility 75, I'm going to start on a hard time frame as per usual, right? Daily. So you can see the momentum, or this is a what is a seller's territory, right? Is a seller's territory. The sellers or the bears are more in control compared to the what, to the bulls. You see, these are the bulls. For a second, extension of the bears. Bulls for the second, extension of the bears. Bulls for a second, with an extension of the what, of the bears. Just like that. So even here we can have the bulls for a second in charge right here. After that, get an extension of the what, off the BS, because this is a seller's territory. From a higher perspective, this is a seller's territory. That's where we see that the bears are in control, or this is a bearish market. So obviously, without wasting time, I'm just going to highlight these levels. So I'm going to focus on this mini uptrend, or focus on this mini bullish trend. Obviously, I'm gonna can see this one as a do like this. So I just see this one as my, I'm gonna put this first. So I just see this one as my pullback. Then eventually we're gonna have a proper market extension to the downside, right? So that's just how it is. Switching to H4, we obviously do have a couple of levels that we can obviously house here. You can house these levels here. You see, so by looking at our H4 on the line graph, you can see that there's already a market U-turn. However, we're not so sure if this will be the extension. However, I do have a way of you seeing that there's going to be an extension. So volatility 75 makes its extensions with what? With breakouts. So obviously I'm going to put this trend line here. I know that once this trend line is broken, we are most likely to have a what? We have to have an extension all the way to the downside. And obviously that's why you want to make sure that you catch the market movement on volatility 75, because when volatility 75 index makes an extension, it is obviously the nicest thing ever. So I'd advise any one of you who wants to trade volatility 75 to just swing it, so you can just enjoy the benefits of trading volatility 75 index, right? So now let's just look here. We had a head and shoulder like structure. We had our left shoulder like structure, we had our head, and obviously had our left shoulder like structure. So like I said, however, we do need to prove this thing if it's really what we're looking for. So obviously you know the rules are very much simple. We just extend this trend line and obviously put another one that side. So what is it that you have to look for? You gotta make sure that your left shoulder like structure is inside of your channel or inside of your trend. Then your head like structure is inside of your channel. Then obviously, most importantly, the last confirmation, your right shoulder like structure must be outside of your trading channel or outside of your trading box. Then obviously from there you can use a trade your candlestick confirmations. So this is just how it is. First candlesticks, because we're looking for selling opportunities, must close below. The second candlestick must also close below, because we are looking for selling opportunities. If we were looking for buying opportunities, the candlesticks were supposed to close close above. So now when the third candlestick formed, that's why you obviously capitalize with your seller, your first seller here. Obviously move it all the way to the downside. So right now we have a market low here that acts as obviously a strong support level. So you have to know that once a support level is being tested for is being tested once, twice, for the third time, it is most likely to break on the board when it's being tested for the fourth time. I'm not saying that this is always the scenario. Sometimes it can be respected, but once a pair is once a level is respected countless times, then it is most likely to be disrespected in the near future. So however, right now we have a market retest here. Market broke out of structure, obviously pushed back to respect the previously broken structure low. Obviously first candlestick was closed outside, the second one closed outside, and obviously on the third, that's where we're supposed to take out another selling opportunities and obviously look for a further extension from volatility 75 index all the way to this level down here. So however, volatility 75 is obviously on a point where it's retesting a buy, and obviously at the same time it's retesting a sell. So in this case, you just if you felt so confident obviously about the buys, you obviously place your buy and put your stop loss so close. And obviously as for me, I'm so confident with the sells because obviously we do have our head and shoulder like structure, and obviously we have our level of retest here. So this from here, I'm looking towards volatility 75 index to drop all the way to the downside. So this is my overall view on volatility 75 index. So last but not least, we're going to be looking at volatility 100 index. Volatility 100 index. So on volatility 100 index, obviously we're using the same thing, guys. Don't confuse yourself, right? We're using the same strategy. So obviously here I can see there's a market low here that I have to take into consideration. Then obviously there's a market high there. So it's fine. I'm just going to switch to a line graph. Then from the line graph, I'm just going to focus on the selling part. So we have a market low there. We have a market low here. Have a market low here. A market low here. Market low. Another market low. Another one. Another one. Another one. So you can see that the bears on volatility 101x, on volatility 100 index, has been in control for the longest time, like for the longest time. So this is how it looks like currently. Keep on pressing the wrong thing. I'm so lazy to use my PC these days, guys. So that's why I'm always analyzing with my phone. So switching to a bit of a lower time frame like my H4, I feel like all these retests, we've covered them. So I'm just gonna switch to what? I'm gonna switch to my H4. So but before H4, I feel like I saw something on my daily, which is this level. So I'm just gonna look at the candlestick confirmations here. As I'm moving these things. Okay, fine. Let me just zoom it a bit. I want to see from the level. The level was tested on our daily. Here, we had the first candlestick closing above because we're looking for buying opportunities. We had the second candlestick close, still running. So by tomorrow, by midnight, if this candlestick closes, here above, I'm gonna take a buy and swing. So I can say it's safe for us to just swing with this thing. And obviously for further confirmation, we can use the candlestick, the trend line, breakout strategy. So we can adjust it to this level here. Yeah, we can just adjust it to that level. If running out of battery. So if obviously this thing breaks this level here, that's another confirmation for us. We're gonna wait for a minimum of 2 candlestick to close above these levels. Then we're gonna take another buy and obviously look forward this extension. So however, because there might be a market retest, if it happens that there's an immediate breakout with no retest, the market will make a U-turn on this Quasimodo level here. Then from there it will push down to this test, then further push to the to the upside. So that's just how it is. My take on volatility 100 index. I don't even want to switch to a lower time frame. I feel like I'm so safe with the bigger time frame here because I just saw a beautiful opportunity of swinging volatility 100 index. If the daily time frame permits, then I'm just gonna stick to that. However, if you want to scalp for now, you can use your lower time frames like your H1. Obviously you had first candlestick closing inside, second candlestick closing inside, third you sell. Obviously wait for a certain market retest, which might be this one, then obviously an extension to the upside. That's just for scalping purposes. But if you want to swing this thing, just use the daily analysis and the H4. That's where you'll just get the bigger picture and obviously flip your account and make it big as possible. So this is what I had for you guys today. I hope you enjoyed the video. I hope it was educational and I hope you learned a thing or two. So obviously if you feel like this video helped you or this video was educational, please do drop a comment. Let me know what you think about this whole video. Let me know how this information might be helpful to you, and obviously make sure that you share it with your friends. Subscribe, like, and all of those things. So thank you so much, guys. Make sure that you also do follow me on Instagram. So Eisenheimer SA. Make sure that you don't follow wrong accounts and obviously end up with some investment things that I don't even know about. So this is just it, guys. I hope you enjoyed the video.
Thought I would fall, but I'm never falling. Please don't call my phone. Don't you ever think of calling. Catching these pips like daily, making money